Today, I will be showing you the easiest liquidity strategy. And this video will contain three main segments. What is liquidity? I'm really going to tell you the ins and outs of it. Secondly, how to spot liquidity. And then thirdly, how to trade liquidity and how to trade the right zones. So without further ado, let's get into it. So first of all, what is liquidity? Liquidity is basically money in the markets. And we can see this in the form of orders. So orders can be stop loss orders, orders can be pending orders, and orders can be take profit orders. So now we know this, then what happens is then how the market moves is that it needs liquidity to move a certain way. It needs liquidity to move from point A to point B. So it needs money to move forward. How does the market get its money? It is going to liquidate orders. It's going to liquidate take profit orders, stop loss orders, pending orders, because of course you are taking your trade from point A to point B. Let's say you're taking a bullish position. You take it at a low and you want to get out at a high. And if price comes at that high, you close your position. And if you close a buying position, there is another seller forward. Because closing a position means selling it to someone that's willing to buy. So knowing this, where would you likely sell in the market? Where would you likely buy in the market? AKA, where would you put your stop losses if you would take a position in the markets? Now, of course, everybody always learns that you need to put your stop loss underneath a swing high, above a swing low. Everyone has been taught that if you're in a selling position, you need to put your stop loss above a swing high. Or if you're in a buying position, you need to put your stop loss underneath a swing low. So what does this mean? Whenever price gets underneath a swing low like this, for example, a lot of stop losses or take profits will be liquidated. And this means the stop losses that were here, they will be bought by money in the market because it is a very good price, and the take profits will be sold as it is a very good price if you would be selling. Now, of course, knowing this and knowing that a lot of people are a lot more smart than us, they know that stop loss orders are at certain points in the market. So for example, this low right here, they see, okay, this low created a new high. Most likely there are a lot of people long from here and they have their stop losses underneath here. So what does this mean? If I'm coming to the market with a lot of money, I need a lot of sellers for my buying position. So whenever price comes down to here, you can see an immediate reaction from this zone. This was the stop loss area and this was the buying area, immediate reaction upwards. Now, this reaction does not mean price is going to do this immediately, but you can see there was a reaction coming from there. To go further into it, how to spot liquidity, and it is practically very simple. You have a lot of ways taught on the internet, and you can use the previous session low or high. You can use the Asian session low or high. You can use your previous day low or high. And while these are all very valid points, I would say it's way too complicated. And as this is the easiest liquidity strategy, I'm going to give you a simpler way. I'm not looking at Asian session highs. I'm not looking at previous session highs. I'm not doing any of that stuff, but I do use liquidity. So what do I exactly do? Of course, I always start with my top-down analysis. And this is always very key because I see a daily liquidity zone is much stronger than a 4-hour liquidity zone. A 4-hour liquidity zone is much stronger than a 1-hour liquidity zone. So I do really want to know where we are in the markets on a higher time frame, so that I know, okay, if I'm aiming for a 50-minute liquidity, for example, I'm not getting backdoored by a daily liquidity that's been taken out. So if we look at the charts right here, and this is just a daily zone that looks like this, we can see, okay, daily took out liquidity right here. And as you can see, when this happened, we had an immediate reaction upwards. Now, if we look at these places right here, price took out this zone. As you can see, there was a reaction downwards. And if we're going to zoom in, this will become more clear. Right here, reaction downwards after we took out this liquidity. Now, knowing this is one thing, and you can already start trading only using this daily time frame, but you need a little bit more to this. You also need to use your lower time frames. So now, right here on a 4-hour, we are basically going to do the same thing. And we are going to watch the markets and see what happens whenever we take out these liquidity points. So if we're zooming in on a 4-hour, we can see there are more liquidity zones in the market. And basically what makes a liquidity point valid for me, whenever I want the market to go down, I search for a high that broke previous lows on a certain time frame or that started a pullback. Now, for an example right here, this is a high that started this pullback, got taken out, and a massive drop afterwards. Right here was a low that broke its previous high, with this move, got taken out afterwards. People have been asking me what profile I would recommend nowadays. It would definitely be Blue Guardian. They have one of the best prices in the game. They offer an 85% profit split. They do bi-weekly payouts. But what I love the most is that they have this awesome feature and it's called the Guardian Protector. It's an equity protector that will literally help you overcome your psychological struggles of overtrading and over risk. The support is available 24/7 and they have no restrictions at all on lot sizes, hedging, trade copiers, EAs, you name it. I've done my research and I've yet to find someone that doesn't agree with me. So I would say check out Blue Guardian if you want a reliable prop firm, link in the description. Then this double top got taken out with an immediate reaction downwards, but as you can see, there was no liquidity being tapped. The fair value gap was filled and that's it. So what can we then assume? That price is not going to go down, it is still going to go up because it is basically rejecting this order block, rejecting this fair value gap and not taking out any sell side liquidity. So it went up even further. And now what happened? Now it did take out this zone right here, this liquidity zone. And even though we are reacting off this, we came higher. What happened right now, very, very important, and really pay attention to this. Price did not take out this high. So what can we assume by seeing this? Or not even assume, what can we conclude by seeing this? Is that taking out this low, we had a massive reaction upwards, and we did not take out this high. So this is a confirmed market structure shift. Then, of course, this is a perfect place to sell. It's where you're going to look for. And then this will become your new point of liquidity that you want to see price come back to. But because we have shifted structures, you don't want to buy at this level because you won't have a lot of room to buy upwards. If you're buying on a 1 minute because you're using this principle, that is also something that I do, then you can still enter a buy position, but no, you have to get out pretty quickly. So what do we want to do? Knowing that we are in a selling position, we want to see, okay, what is the last high that broke a previous low in this instance? This right here is the last high that broke the previous low. As you can see, highest point that broke this low. What are we going to look for? We are going to look for a liquidity grab of this high. And what happens a little later is we have a liquidity grab of this high right here. So then again, perfect place to sell. Now, of course, this is on a 1 hour. And how could we use this to the best of our advantage? So let us go down to a 5 minute even. I want you to pick a session. I think this works the best if you pick a session. For me, for example, I trade mainly solely London. And I want to see liquidity grab between 8 and 11 a.m. in the morning, Brussels time. So GMT +2. You will see on the screen what it is for New York Standard Time, as I know a lot of you guys are using New York Standard Time. So if we then go back right here on the charts, as you can see, we have made a low in this position. And this low was the result of this right here, a big pullback to the downside. But this pullback did not take out this previous low, did not trade into this order block zone. We did take out previous highs right here, and we rejected this fair value gap with a pretty nice pullback on this move in total if you're looking at it on the 4 hour, for example. So as you can see, pretty nice pullback on this move into the 61.8. So we definitely remain on the selling side. Knowing this, how could we still benefit buying in this position? Because we're going down and we see price comes down pretty aggressively, does not take out a low, does not trade into this order block. So we know, okay, there's most probably still some room left to go down. And once we go down to this order block, we will see some type of rejection. It does not mean that we're trading into these highs or above these highs. It only means we're seeking for the next point of liquidity to then go down. So what becomes the next point of liquidity? If we go down to here, it is this high. This high becomes the next point of liquidity, as this is the highest point that broke its previous low and that it made this displacing move downwards. Does this high overlap with something? Yes, it does. It overlaps with an hourly order block. So this high overlaps with an hourly order block. This is even better, guys. Hourly fair value gap right here and an hourly order block right here. So then already, if this move is here, what will we predict? That price is going to do something like this, right? It goes down, comes up here, at least, maybe even higher, and then go lower from there. Knowing this, we have created that story. We go to a lower time frame, and we're basically going hunting in this zone right here. We're going to look in the zone right here. And like I said, I want it to happen, this liquidity grab, between 8 and 11 a.m. in the morning. That's my ideal, my chef's kiss. So what happens right here? Price moves very aggressively downwards, takes out this previous low, trades into this order block, moves upwards very aggressively. Question for you guys. is this a liquidity grab? Yes or no? This isn't a liquidity grab. Because yes, this is maybe the highest point that drove price lower, but this was already the liquidity gap that occurred right here. And as we know on a higher time frame, this was the point of liquidity that we are looking for. So what do we know? This right here is not a liquidity grab, but it is a market structure shift, because a previous high has been broken. And by the way, for a market structure shift, I want to see a body candle close above previous highs. So right here, we have a market structure shift right here. And now we know, okay, price has turned bullish. So what do? We seek for a good place to enter. What I like to do is I enter right away on a market structure shift if my stop loss is not too big doing this. Now, 24 stop loss could be doable, but in this instance, there is a big fair value gap left open right here that most probably is going to get tapped anyway. So 16.5 pips stop loss. Now, what is our target going to be? It is going to be this liquidity high right here. And that is basically simple as it gets, guys. I hope I did a good job explaining it, but this is what I do on every single day. And it is super, super easy. Now, the same thing applies for the other way around. So we take out this point of liquidity, as you can see right here. What do? We wait for a market structure shift. So price takes out this point. Now, when does the market structure shift occur? Exactly right here. Where do we enter? We can enter on this point, or we can search for a better entry. Let's say we enter right here. We do place our stop loss above this high. Now, how do you know this one is not going to get stopped out? You don't. This is always in the cards that it is possible that this high is also going to get liquidity hunted once again. But most of the time, I would say 80% of the time, 90% of the time, don't take my word for it, but I've seen numbers like this in my own results. Because we've taken out liquidity already with this move, it is not going to go back once more. It is very important to have that market structure shift because, for example, right here, you can see it takes out this liquidity point and then it still moves up higher, but you didn't have a market structure shift. So if you wait to have that market structure shift, I'm assuring you, you have like an 80% chance you will be correct. And then what do? You target the opposite point of liquidity. This will be a continuation right now, and that is your trade the other way around. As simple as it gets, guys. This is how to trade liquidity. This is my liquidity strategy, and I hope you enjoyed. I hope you learned a thing or two, and I will see you in the next one. Bye bye, guys.